Our year-end target, this is from the Fundstrat side, for Bitcoin is $250,000. And if you look at the 8-year average, okay, then you can see the range of prices for Ethereum using this ratio and different levels of Bitcoin. And here's the 2021 high. And as you can see, at a $250,000 Bitcoin, you get to somewhere between $12,000 and $22,000 value per Ethereum token. But that's just a ratio recovery. If you look at the replacement cost of payment rails and the banking system, that gets you to an implied value of Ethereum of around 60,000. And that puts the ratio at roughly 0.2500 Ethereum to Bitcoin ratio. And as you can see, that's how you get to $62,000 per Ethereum token. So plenty of upside.
By the end of this year, Bitcoin could be valued at $250,000, and Ethereum could follow with a breakout to $62,000. That's the latest message from Tom Lee, co-founder and head of research at Fundstrat. His view is built on the historical ratio between the two assets, where 250,000 Bitcoin implies Ethereum should trade far above its old highs. And if you add in Ethereum's role as the backbone of payment rails, tokenization, and smart contracts, the case for a 60,000 plus Ethereum becomes even stronger. For Lee, these are the natural outcome of structural demand, wealth shifting into digital assets, and the replacement cost of legacy systems. If he's right, the bull run that has carried markets this far is only building toward one of the strongest peaks crypto has ever seen. Make sure to stick around until the end of the video, as Tom Lee breaks down why the bull run could carry through year end, with Bitcoin and Ethereum soaring.
First is, let me just start you with an introduction. Our philosophy is to build the premier Ethereum treasury. And we are achieving this by also delivering exponential growth. And we have some critical partners here, including Mosaics, Capital, Pantera, Kraken, Founders Fund, GSR, FalconX, DCG, and Galaxy. And we're doing this by delivering shareholder value through a series of steps. And I'm the chairman of the company. Now, I wanted to focus this video on a couple of things: the Ethereum macro trade, and also understanding the network value. That's really what we're going to focus on this month. And in terms of the macro trade, I want to take us back to 1971, when the dollar went fully synthetic. And what I mean by that is that in 1971, President Nixon ended the convertibility of the dollar to gold. So in other words, the dollar was no longer backed or exchangeable for gold. It was only exchangeable for other dollars. Okay, so what does that mean? Well, that means that in 1971, the dollar became fully synthetic. Now, people in turn went to find a store of value, which was gold. But keep in mind, that really wasn't the only thing that happened in 1971. In 1971, someone had to create a market for the synthetic dollar. Think about that. All of a sudden, we had to make sure people would be willing to use dollars, especially because it was no longer backed by gold. Well, the winner there was Wall Street. And let's see how this move by Wall Street created the innovation boom. In that 15 years after the 1971 moment, Wall Street created many innovative products. They created money market funds, currency futures, debit cards, mortgage-backed securities, currency swaps, interest rate swaps, S&P index futures, zero coupon bonds, CDOs, and even ETFs. All of that happened following the creation of the synthetic dollar. In fact, of the 30 largest companies today, 7 of these are financial institutions. So you could see Wall Street was a huge winner as we created the synthetic dollar. Well, Ethereum is having this 1971 moment. And what do I mean by that? Well, there's a couple of things that happened. The Genius Act is creating the stage for a stablecoin boom, and I've covered this in the previous video. And SEC's Project Crypto is moving Wall Street onto the blockchain. Wall Street is going to financialize the entire system, the existing system of real-world assets, onto the blockchain, but they're also going to create inefficiencies by itself moving their architecture onto the blockchain. So in our view, Ethereum is having its 1971 moment, where the real-world assets are becoming synthetic or tokenized. Treasury Secretary Bessent sees this becoming a multi-trillion-dollar market for stablecoins. And it's not just stablecoins, but banks are already moving to build products on Ethereum, whether it's JP Morgan, Robinhood, Goldman, Bank of New York, even Walmart and Amazon. So what does this mean? Well, in 2025, as the real world becomes digital, it's going to be natural to say, I want to find the digital store value, and that is Bitcoin. And I'm a believer in Bitcoin. But it's also going to create a market for digital assets. And we think the winner there is Ethereum. And in fact, Wall Street is building here on Ethereum. So let's just think about one story arc. What is Wall Street going to do to innovate on the blockchain over the next 10, 15 years? Well, they're going to build stable coins, tokenize equities, credit, tokenize real estate. They're going to monetize reputation, even monetize intellectual property. And a lot of this is happening on Ethereum. For instance, this is a tweet from Adriano Feria that Ethereum added $6.3 billion of stablecoins just in the last 7 days. Well, that's more than half of all the stablecoins Solana has managed to capture in over the last 5 years. It's more than the entire stablecoin supply on Hyperliquid, and it's 35 times the amount of stablecoin circulating supply on Ripple. And the stablecoin supply in Ethereum is now $160 billion. That's double where it was about 18 months ago. So you can see Ethereum is the winner here. And Ethereum has captured the majority of the real world assets. They're all taking place mostly on Ethereum. And Sharplink's chairman, Joe Lubin, agrees. He says Wall Street will stake ETH because they currently pay for their infrastructure, and Ethereum will replace much of the many siloed stacks they operate. Again, you can see a lot of this is taking place on Ethereum. And it's not just Wall Street. AI is also building products on the blockchain. In fact, we think one of the big story arcs is that it's not just Wall Street building itself onto the blockchain. It's really AI converging onto Ethereum. One of the co-founders of Ethereum actually said this. He thinks Ethereum could be the key to AI decentralization and actually act as a decentralized partner in solving current problems with AI intelligence platforms. So what does that mean? Well, that means that you're going to monetize data collection, royalties, loyalty programs, verify agentic AI, and proof of humanity. That's also taking place on Ethereum. So you can see the future is quite bright. And that's why, we come back to this analysis by ethdigitaloil.com that Ethereum's productive essentially is the underlying token that's going to power both Wall Street and AI. And keep in mind, as you worry about supply, Ethereum's supply is growing below that of Bitcoin. And we also know as an asset class, if we think of Ethereum as digital oil, well, that's really what markets should be used to. From 1990 to 2018, ExxonMobil was one of the top 5 largest companies in the S&P 500, and it was always valued on a multiple of its price to oil reserves.
Ethereum is entering what could be its own 1971 moment. That's the kind of structural shift that redefines markets for decades. Just as Wall Street turned the dollar's break from gold into an era of financial innovation, institutions today are building a new foundation on Ethereum. Stablecoins, tokenized equities, credit, and real estate are already moving onto the network, while AI companies see Ethereum as the platform to decentralize data, royalties, and proof of humanity. Right now, Ethereum's supply growth is still lower than Bitcoin's, but the analogy to digital oil captures its value well, since Wall Street and AI both need the fuel Ethereum provides. With $160 billion in stablecoins already circulating on Ethereum, and inflows that continue to accelerate with no signs of slowing down, the case for Ethereum as the winner of this news cycle grows stronger every week.
So let's think about Ethereum's network value in that context. Well, here's Ethereum's price since 2018. And as you can see, there's 2 periods I'm shading here. These are called bases. And in Wyckoff's methodologies, they say the bigger the base, the bigger the breakout. And what they mean by that is that you're creating a lot of potential energy as a stock or a network asset bases, and then eventually leads to a breakout. Well, let's look at that breakout. In 2020, that breakout took place and Ethereum went from $90 to $48.66, or 54 times increase. Well, the low point here in this base was $13.85. So with this breakout, we're expecting an upside move. Is it potentially 54x? I'm not sure, but that's what happened last time. Another way to think about Ethereum is the Ethereum to Bitcoin ratio. And in our view, the tailwinds I'm talking about argue for an all-time high in this ratio. The 8-year average Ethereum to Bitcoin ratio is 0.04790, and it's currently 0.04032, meaning we're below the long-term average. The all-time high in this ratio was 0.080727. Of course, it started off higher, but I'm talking about the 2021 all-time high. So we think that not only should Ethereum recover to the long-term average, it should probably get to the all-time high ratio and arguably exceed it as we start talking about Ethereum acting as the chain for both Wall Street to build its payment rails and the financial system, as well as AI. So let's think about what that means for price. So I have a grid here. On the left side is Bitcoin price levels, and then going across are various levels of the Ethereum to Bitcoin ratio. Our year-end target, this is from the Fundstrat side, for Bitcoin is $250,000. And if you look at the 8-year average, okay, then you can see the range of prices for Ethereum using this ratio and different levels of Bitcoin. And here's the 2021 high. And as you can see, at a $250,000 Bitcoin, you get to somewhere between $12,000 and $22,000 value per Ethereum token. But that's just a ratio recovery. If you look at the replacement cost of payment rails and the banking system, that gets you to an implied value of Ethereum of around 60,000. And that puts the ratio at roughly 0.2500 Ethereum to Bitcoin ratio. And as you can see, that's how you get to $62,000 per Ethereum token. So plenty of upside. I also asked Fundstrat's Mark Newton for his technical take on Ethereum, and he thinks Ethereum could reach 9,000 by early January. According to him, Ethereum could reach 9,000 in late January, but he also believes that in September, Ethereum could be set to reach somewhere between 5,500 or so. And now let's turn to digital asset treasury fundamentals. There's 5 ways for a digital asset treasury like Bitmine to increase its Ethereum held per share. It can issue stock at a premium to the dollar held of the ETH per share. It can do equity-linked securities to monetize volatility. It can use income from operations to buy more ETH. It can earn staking rewards and invest more in Ethereum. Or it can acquire digital asset treasuries trading close to NAV. And Ethereum treasury companies are crypto infrastructure businesses. First of all, Ethereum is a proof-of-stake blockchain. So Ethereum treasury companies secure the network. Ethereum generates a staking yield, and that's effectively revenues for Ethereum treasury companies. Staking secures the network. So these treasury companies are providing an important security operation. And eventually, stablecoin issuers and real-world assets will want to stake ETH. And again, as Joe Lubin points out, he believes that this is what Wall Street will ultimately do. And here's an example, or I think the best example of a successful crypto treasury is MicroStrategy, which has seen the stock price go from 13 to 335 over the last 5 years. And as you can see, 10 times of the return came from Bitcoin's rise from 11,000 to 108,000, but 25 times of the total return of the stock price from 13 to 335 implies that the treasury function delivered roughly 15 times that return. Let's summarize with Bitmine financials and strategy. Now, Bitmine is the number 2 crypto treasury in the world with roughly 8.98 billion of Ethereum held. And as you can see, it trails only MicroStrategy, but it's larger than the third, fourth, or fifth largest crypto treasuries by a significant margin. And Bitmine has grown its treasury holdings quite rapidly. This is MicroStrategy's accumulation of Bitcoin over the last 5 years. And you can see that Bitmine has raised 8.9 billion, something that took MicroStrategy over 1,200 days to reach. And let's not forget the roadmap ahead, that Bitmine has many phases to its operations, but ultimately the focus is on getting to 5% of the Ethereum network.
Ethereum's price action since 2018 shows long base's building potential energy, and history suggests that the bigger the base, the bigger the breakout. The last major move turned $90 into $4,866. That's a 54 times surge. And while no one can guarantee that scale again, the setup is similar. The Ethereum to Bitcoin ratio also remains below its long-term average, leaving room not only for recovery, but for new highs as Wall Street and AI expand on the network. If Bitcoin reaches $250,000, a simple ratio reset could put Ethereum between $12,000 and $22,000, while the replacement cost of financial infrastructure points closer to $62,000 per token. Meanwhile, in the short term, Fundstrat projects that Ethereum could climb to $5,500 by September and $9,000 by early January. With treasuries, staking, and corporate strategies accelerating adoption, the case for Ethereum's next breakout is more solid than ever. Do you agree with these projections, or do you see Ethereum taking a different path? Share your insights in the comments. If you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.